Good morning, homikust. That, I'm afraid, is the last bit of Estonian you're going to hear from me, because it's apparently the fifth most difficult language to learn in the world. But it's a great pleasure to be here in Tallinn. And what is not difficult is the enormous, the tremendous reception that we've had, both from Supplier Plus, Lever ID, who I thank wholeheartedly, and also with the involvement of the members of the Estonian government. Estonia is a real hotbed for digitization. I was talking to someone earlier on, they said, well, of course, because this is a small country. But what is being done here is very scalable. And the depth of the experience, the passion of the startups here means that what you are doing here today will have meaning and will reverberate around the world tomorrow. So I'm enormously pleased to be here. My name is Sean Edwards. I'm chair of the ITFA, the International Trade and Forfeiting Association. Most of you here from Estonia won't know who we are. We have some friends from Armenia and elsewhere who've attended some of our events. We are a global trade association of around 300 members. We are international. We have members and committees from China to Australia to the US, all over Asia, and of course a big concentration in Europe, especially Northern Europe, but increasingly in Central and Eastern Europe as well. So we cover a lot of different parts of trade finance, a lot of different sectors and industries. We started out in the forfeiting business. That is a business that still exists, but has evolved extremely rapidly. Our functional committees now cover things like fintech. We have a cohort of 45 fintechs. We are the most comprehensive fintech membership of any trade association in the world. And that really covers the A to Z of digitization, from some very small companies to the very big platforms, to the tech providers. Some of you may have heard of people like R3 and Finastra and China Systems, but also some very small, much smaller companies. Supplier Plus, somewhere in the middle, rapidly growing from what I can see, adding new offices all the time. We're very active in insurance. We're very active in the general trade finance market as well. So with that, a quick introduction. Can I please ask my other speakers to come up, please? Luukas from the Ministry of Economic Affairs. There you are. Thank you. Magnificent bow tie. Wonderful. And Ian Brown from EBRD. I'll take a seat, and maybe Luukas, you can just go first. Good morning.
Morning. So thank you for joining us here, I guess both physically and virtually. I want to say a few words sort of about how the Estonian government has been thinking about some of the underlying ideas of today's discussion, how we've been conceptualizing the idea of real-time economy. A few words about me. I guess my formal job title is Undersecretary for Digital Transformation, but everyone knows me as a Government Chief Information Officer. And basically my job is to keep the IT shop on the digital government side humming nicely, and to support all the wonderful applications, everything from healthcare to voting to, of course, business that run on top of that. Now, here in Estonia, we've been working on the idea of a real-time economy where data moves seamlessly, where the friction between firms disappears for almost 20 years. And you probably know the technical story. You've heard about our EID, you've heard about X-Road and how we exchange data both between public and private authorities. The numbers are impressive. In the case of EID and signature, Estonians give more than 300 million digital signatures and authentications a year. And why that's perhaps interesting is that's for 1.3 million people, which is to say, if we think about how much across the world people give digital signatures and authenticate themselves in secure means, the numbers are a small fraction of that. And Estonia gives you some picture of where we could be headed, with every person in Estonia giving more than one, or giving 2 or 3 digital signatures or authenticating themselves per day. Now compare that to the global market for digital signatures and authentications. Or the X-Road, which connects 200 public authorities, but more than 500 private sector authorities in seamless data exchange, with more than 1.5 billion data transactions a year. Now what we've calculated is that just digital signing saves us 2% of GDP a year, from time saved, from procedures sped up, from paper not printed out. But even with this, we have a long way to go. And I think this sort of, even the case of even Estonia points us in the direction of the difficulties we still have to overcome and the opportunities that lie ahead. So, for instance, e-invoicing, 97% of business to government sales and transactions are e-invoiced electronically in Estonia, but only 30 to 40% of B2B transactions. So very conservatively, just based on e-invoicing, ECMR, and a few other things, we estimate that enterprises in Estonia could save an additional 200 million euros a year from implementing what's already in the works today. That, by the way, is equal to the government IT budget. So 200 million euros a year is a lot of money in a small country. In Finland, we calculate that the savings could be 900 million euros a year. Now, you know all these statistics far better than I do, and I don't have to convince you about the sort of value of some of these electronic forms of data exchange and the faster transactions we could build on top of that. But I think it matters on a bigger level too, beyond a few euros saved and a little bit more efficiency. If you go back to your economic theory, to Coase's theory of the firm, why do companies exist? Because of inefficiencies and transactions between people operating outside of the structure of a firm. Friction. Now, having automatic e-invoicing or seamless data exchange does not eliminate that friction fully. It doesn't solve the question of, do I trust my counterparty? Do I trust their motivations? But it actually removes a fair bit of that friction. And that really matters in the context of small economies. That matters for Estonia, which doesn't have massive firms generating tens of billions of euros in revenue a year. Rather, we're a country of small companies, of startups and scale-ups. And so every little reduction in friction, every way in which we can level the playing field between the large conglomerates of the world and small companies is a massive boon to our economy. And it's a massive boon not only to our economy, but to the economy of countries like us who trade with us. More broadly, it is, I think, of particular value to Europe, where collectively we do not lack the depth and the size and the integration of our home market that the US and China have. So the question becomes, how do we compete? And obviously we're not going to solve all of these questions with frictionless data exchange, but it actually will help, because it will reduce the frictions of transactions between firms. It will make it possible to build more complex cross-border supply chains in a more seamless manner. And particularly in the context of the economic changes that we're going through today, an increasing digitization, where we're really still at the beginning of this exponential growth in how digital technology is going to transform every sector of the economy, removing impediments to speed and increasing collaboration is incredibly important. So what should we be watching in this space in the next couple of years? Well, I think we're going to see massive development on how we integrate our supply chains, both in terms of data and more broadly. I'll mention a few things that we're working on here in Estonia in particular. Our closest collaborator in terms of economic integration is Finland. A few months ago, the Finnish and Estonian governments published a joint report on ways of further collaboration between the two countries and how to bring the economies closer together. And basically one of the major headlines was use or creation of a cross-border real-time economy in which the work that Estonia has done domestically and Finland's done domestically is integrated together so that data moves seamlessly, everything from e-invoicing to tax information to social insurance information to health information moves seamlessly across the Estonian-Finnish border so that a firm in Estonia and a firm in Finland really can't tell the difference of who they're working with and where they're operating, other than perhaps that, Finnish is, I don't know if it's harder or easier to learn than Estonian, but it's about as difficult. So Estonians and Finns do have an advantage learning each other's languages. We can't get rid of that obstacle, but everything else we basically would like to remove as an obstacle so that Finland and Estonia become, not just in the sense of being part of the common market, but in a deeper way, a single economic space. And this is an agenda that we, of course, are pursuing not just with Finland, but across our region. So working very closely with the Nordic and Baltic governments across a range of policy areas to reduce frictions and to make it possible for borders to disappear even more than they have already. Now, this is, of course, something that Europe has also been working on. You are, I'm sure, all familiar with the Single Digital Gateway Initiative, which is being rolled out over the next couple of years. Now, some of the difficulties that we're having with the Single Digital Gateway also point at why this is hard and why we can great talk and talk about wonderful visions, but when we try and implement it, things get difficult. The expensive part of building 20 plus services where data is exchanged seamlessly across Europe and various forms of bureaucratic attestations from tax certificates to health data are accepted automatically, everywhere from Lisbon to Helsinki. The difficult part is not the technical transport of the data or the technical interoperability of the different connectors and components. It's the semantic interoperability of the underlying services. Because the way in, the semantic statement of what a tax debt constitutes in Portugal may not be equivalent to what it is in Estonia, and the legal nuances differ. And so harmonizing that and having the data flows work around that, it costs a lot of money, and it takes efforts and resources. And so as we talk about this vision, it's also the case that getting there will require time, will require effort. And I guess that's why we're here today, to talk about what we can do, to talk about the upsides and the positive elements. So finally, I want to sort of reflect on some of the sort of the broader trends, not specific to Estonia, the region more globally that we see coming, and also some of the risks and the opportunities. So identity, blockchain, digital currency, digital assets. Identity. You are, I sure am all following how Europe has been attempting to develop a single framework for digital identity over the last decade, 2 decades really, and we have not succeeded so far. We are now in the process of negotiating a second EIDAS regulation on EID and signatures, but I will say the fundamental obstacle to uptake, to e-signing, to authentication, to identity, has not been the question of a legal framework or the presence of technically capable infrastructures. It's been one of uptake. So what Estonia got right with its digital signature 20 years ago was had nothing to do with the technology. What Estonia got right 20 years ago is that we deployed our EID and our signature framework in such a manner that it was used simultaneously by the public and the private sector, in particular by banks and telcos, in a manner that got your average user to start using it. Whereas many other countries government-issued EIDs that could only be used for government services. And because the EID in Estonia was what you used to authenticate for banking, was what you used to sign contracts with both public and private sector, we very quickly got to the point where 90+% of the population was actually using these infrastructures. And that is what has allowed us to realize the cost savings that we've realized, to realize the efficiencies that we've realized, not the mere presence of the infrastructure. And so having a go-to-market strategy, thinking about uptake, for the public sector, for public infrastructure, something we're not used to doing, incredibly important. Blockchain. We could have a whole conference on blockchain and supply chains. I'm not going to even venture into that space other than to say that what we're building today in Estonia and what we're building with Finland is not yet blockchain based. In a sense, we are talking about bilateral exchange of infrastructures run by government, centralized, if you will. But they do point at the direction of the value of having data infrastructures that exist in a broader public space, in a broader digital commons. And I think the challenge that we face is that what scales at a level of 1 or 2 participants does not scale to the world. And if we're going to build global infrastructures for identity, and authentication, for the exchange of all sorts of sensitive data, they're going to have to be based on a different principle than the way we've built Web 2.0, cloud services, questions around data protection, data sovereignty. That model isn't going to work. So when I look at what's happening in the Web 3 world, I look hopefully, I see with sort of what I positively see is a hope of solving a lot of the obstacles that our current infrastructures have. But I also have to admit we're not there yet. We're not yet there in terms of scalability. We're not yet there in terms of security. We're certainly not yet there in terms of familiarity, standardization, certification. I spent the last couple of years before I came back to government working for a blockchain company here in Estonia, working on some of these questions. So they're near and dear to my heart, but I will also say we're not quite there yet. One thing, however, that is going to bring us there, or that is going to accelerate our move in that direction, is the very rapidly changing world of digital currencies and digital assets. So notwithstanding the market crash that stablecoins have seen this year, what we see right now is two massive changes. First of all, very clear regulatory frameworks being established for digital assets that will provide for consumer protection and the type of regulation that financial services have that I think will make it possible for institutional parties of all sorts to move into that space. And second of all, central banks working on issuing digital currencies. So both the digital dollar and a digital euro are likely to become a reality in this decade. Now, why does that matter for this crowd? Because when you have a monetary infrastructure supported by government, issued by government, that on a protocol level looks like a blockchain, looks like a Web3 protocol, then all the various types of scenarios around Web3, the smart contracts, much more automated sort of possibilities that the Web3 community has been painting and describing for a few years, will suddenly become very practical realities that government has a stake not in opposing and de-risking, but in actually actively promoting. And so my prediction is that when CBDCs become a practical element of how our economies function, you will see a very quick takeoff around everything in the blockchain and the Web3 space, because that gap between government and very innovative private sector services will be collapsed to a much smaller space. And so finally, I also want to talk about some of the challenges that the broader that more broadly we've had in the last couple of years talking about supply chains that are risks, but I also think opportunities. We, of course, have witnessed in the last few years the vulnerability of our supply chains and the vulnerability of a just-in-time global economy. From the perspective of this region and a country like Estonia, of course, this has been an argument for recentering supply chains within Europe, within a more local ecosystem. And I think that there are a lot of opportunities to look at how we can focus on some of the value add of very close collaboration and integration that you don't necessarily have in complex global supply chains. But the reality of the matter is that we also don't want to lose the benefits of the global supply chains that we have built over the last few decades. And so one of the things to think about as we talk about sort of more regional supply chains in the Nordics and the Baltics, within the EU, within with countries within Europe's nearer neighborhood, is that we ultimately want the things that we build to scale globally and to help us build global supply chains and more integrated global supply chains that are integrated not just for goods, but also for services, for data. Now, one area where the data supply chain brings us to a space again of risk is around cybersecurity. What we've seen in the last year or two is that attacks on the supply chain on the software supply chain and the data supply chain have been central to some of the most aggressive cyber attacks that have been carried out, whether by criminals for the sake of financial gain or in the context of war, such as the war in Ukraine. And so there are no easy solutions to how we solve these cybersecurity supply chain questions, other than to say that some of the same principles and design ideas that you are working on are also incredibly important when it comes to the software supply chain and the security supply chain. So basically, moving meta information, making it possible to track changes, understanding all the parties and the participants that have contributed to a software supply chain allows you to properly assess the risk and to make more informed decisions around the software you buy and increasing the physical devices that have software integrated into them. And here, too, we see that the regulatory environment is going to be increasingly more complex over the years to come. And indeed, perhaps this brings me to the last complication, but also opportunity that I hope is a part of today's discussions, which surrounds the increasingly complex set of regulations that we have around global supply chains, global commerce, around questions like KYC, anti-money laundering, and of course, in particular, in the wake of the Russian aggression in Ukraine, sanctions. And these are areas where, again, the risk and the cost to business is clear, but the opportunity for ways to automate the regulations and the controls that are needed to serve the public interest also is very clear. And so we have companies I know in Estonia working on automating AML and KYC, and I know that's part of your discussions today. And I encourage you to be ambitious and creative in those discussions because, again, if we don't solve some of these challenges, we will reimpose significant friction and barriers to cross-border trade in particular, both within the EU and globally. But if we solve these things, then we can have our cake and eat it too. And so I don't have a kind of a neat conclusion other than to say that I'm very excited for the discussions you have today. What you're working on is at the very forefront of how our economies are going to be functioning in the next decade, both in terms of opportunities and risks. And so I hope that you have a very open-minded discussion. I hope that you move seamlessly back and forth between talking about business values and business models and some nitty-gritty technical questions around standards and technologies. And good luck. And with that,
Thank you very much.
Thank you, Luukas. I've said my piece, please.
Thank you very much. Please have a seat. Well, thank you for that really encouraging speech. And I think one of the really important things is, as has happened here, the involvement and the support of the government. Estonia is a small country. It has a big voice, though, in Europe. And as I said when I opened, it has an even bigger role to play in digitization. But another one of the big supports of global digitization, and again, I want to emphasize the point that what you are doing in Estonia actually has global relevance and global application. There's great scalability in a lot of the solutions that your startups are coming up with. But support is needed not just from national governments and regional governments, but from parastatals, from multilaterals. And I'm therefore great pleasure to introduce Ian Brown from EBRD, who's head of the Baltics.
Shall I sit here, or do you want me to stand up?
As you wish.
I'll sit here.
Okay.
Let me start by saying just a few words for those of you who don't know us about EBRD. EBRD is a multilateral financial institution or international financial institution. We work in 37 countries, used to be 39 countries. 2 countries we don't work in anymore until recently. And from north to south, we go from Estonia in the north. I think this is probably the most northern place we work. And I suppose Egypt is probably or Morocco will be the furthest south. And then west to east, Morocco is definitely the most westerly, and Mongolia is the most easterly. So it's the former Soviet Union, Central Europe, and Southeast Europe, and now North Africa. I think the timing of this conference could not be more interesting, let's say. But when you originally planned to hold this and you cancelled it from February, if I'm right, the date was 20th, or I looked it up and it said 20th or 21st of February. So that's a different world than the world we're in today. And for us, it's a different world. So 8 years ago, the largest country of our countries where we worked was Russia. We had a portfolio of 8.6 billion euros in Russia. We stopped working there in 2014. But even at the outbreak of the war, we had a 900 million euro portfolio in Russia. We have a very big portfolio in Ukraine. And a big portfolio in Belarus, and Belarus and Russia we are not in. We've left, we've closed the offices, and where I sit, I'm based in Vilnius. All of our Minsk colleagues are now sitting with us in Vilnius. So it's a different world, and I think the compounding crises of COVID-19 and now the war in Ukraine have shown the strains on supply chains and the impact that has on the real economy. We can all see inflation, and we can see the, sometimes empty shelves, even in Maxima in Vilnius, and what the situation will be like later in the year. Well, we have to see. So supply chain finance and the importance of providing liquidity to the millions of small businesses that supply us, or that fuel the economy, is absolutely crucial. And I think the timing of this conference couldn't be better. EBRD is a mandate-led bank. We were set up at a time and for a purpose. And the time was 1991. It was immediately post the fall of the Berlin Wall and the Iron Curtain, and the idea of EBRD was to be a specialist development bank. So there were already development banks. There were a lot of questions, why do we need this one? Well, this one was set up to create market economies. Now, there are many people who say, and some of our shareholders used to say, what are you doing in Estonia? It is clear that's a job done. It is clearly a functioning market economy, and you should be concentrating your capital and resources in Mongolia or Jordan or other places. But for us, we or the Estonian government asks us still to stay here, and we think we still have a role to play, because we judge a market economy by, how do you know when an economy is a market economy? Well, the answer is we measure it against certain factors, and those factors are how inclusive is it, how integrated is it with its neighboring economies, how green is it, and how resilient. I knew there was a word I was searching for. And the importance of resilience is shown right now. So, is your economy resilient to external shocks? Is it integrated with its neighbours? And of course, the green transition, which was, last year we were all talking about COP, and now we're all talking about the war. But doesn't mean that COP or the green economy transition isn't important. I would argue it's even more important. For a country like Estonia that relies on oil shale, improving energy efficiency and increasing renewable energy is more important than ever. So all of the things that we judge a market economy by, I think those are still relevant both in the advanced economies like Estonia and obviously in the less advanced economies like Mongolia or Kyrgyzstan or Kyrgyz Republic and so on. What's supply chain got to do with this? Well, supply chain finance reinforces all of these factors. And especially with sustainable supply chain finance, which I think will be discussed today, it can help to drive the green economy transition. So supply chain finance is I would say an important part of driving the integration, improving the resilience, and greening the economy. And that's why supply chain finance has such a crucial role to play, and why this conference has come at exactly the right time. Thank you very much.
Thank you very much, Ian.